All right, let's pull back the curtain on one of the most powerful and honestly kind of secretive forces in the entire world. It's something that quietly shapes your job, your mortgage, and the actual value of the money in your pocket. We are talking about central banking. Let's dive in.
It's the question that hangs over everything, right? You look at the economy, this giant, chaotic, messy thing with all this money and jobs and prices flying around, and you can't help but wonder, is anyone actually flying the plane? Is there some hidden force trying to steer it?
Well, the answer is kind of yes. That force is the central bank. And really, the best way to think about it is like an air traffic control tower for the entire economy. It's not flying every single plane, but it is watching the radar, managing the flight paths, and trying to guide the whole system to make sure nobody crashes. Okay, so let's get one thing straight right away. This is not your local bank branch on the corner. You can't just walk into the US Federal Reserve and open a checking account. A normal bank is for you and me, for car loans and credit cards. A central bank, on the other hand, serves the entire financial system. Its whole job, its only job, really, is to keep things stable. So what does this control tower actually do all day? Well, its main mission can be summed up in a phrase that sounds kind of funny. Boring is good. Seriously, when it comes to the economy, you do not want drama. You want predictability, you want boring. Their number one job, the one you always hear about, is taming inflation. Because high inflation, man, it's like a silent thief. It just eats away at your savings. It makes your paycheck feel smaller and smaller every month. And if it gets really bad, people can totally lose faith in their own money. So the central bank's goal isn't excitement. It's to keep inflation low and, this is the key, predictable. That boring stability is what gives all of us confidence. But here's where it gets tricky. Their second huge job is keeping as many people employed as possible. And these two goals, low inflation and tons of jobs, are often like two ends of a seesaw. The main tools they use to fight inflation, like jacking up interest rates, well, those same tools can slow the economy down and cost people their jobs. So central bankers are constantly walking this tightrope, trying to cool down prices without freezing the entire job market. It's a way harder balancing act than it looks.
And their third big job, it's all about protecting the whole system. Because here's a simple and kind of scary truth. Our banking system is built on confidence, and individual banks, even the big healthy ones, are surprisingly fragile.
Just think about it for a second. If a panic starts and everyone rushes to the bank to pull out their cash all at once, that's a bank run. Even a perfectly healthy bank will just collapse. It'll run out of physical cash. So to stop that one falling domino from knocking over the entire system, the central bank has to step in as the lender of last resort. It basically provides emergency loans to stop the panic before it spreads.
And this is the perfect metaphor for what they do. They are literally the firefighters of the financial world. They're always on call, ready to put out a fire at one bank before it burns down the entire city. It's a job you hope they never, ever have to do, but it is absolutely critical that they can. So that's what they do. But what about the how? How does this control tower actually guide the economy? Well, their main tool, their big lever of power, is something you hear about all the time in the news, the interest rate. It's the economy's gas pedal and its brake, all rolled into one. Okay, so let's walk through it. Let's say inflation is getting way too high. Prices are going crazy. The central bank slams on the brakes. They raise interest rates. All of a sudden, getting a mortgage, a car loan, or a business loan gets a lot more expensive. So what happens? People and companies borrow less and spend less. The whole economy cools down, and that helps bring inflation back under control. And you guessed it, it works the exact same way in reverse. If the economy is weak, maybe unemployment is climbing, they hit the accelerator. They cut interest rates. Now borrowing money is cheap. That encourages people and businesses to spend and invest, which helps the whole economic engine speed back up. By just toggling between that brake and that accelerator, they try to steer the whole system. Now, having this much control gives central banks an absolutely immense amount of power. And that kind of power leads to some big questions and some even bigger myths. So let's just tackle the biggest one head on. You hear this all the time, right? Especially when there's a crisis. The Fed is just printing money. They're just running the money printer. But is that really what's going on? So the wild thing is, the answer is technically yes, but it is not what you're picturing in your head. It's nothing like a giant printing press spitting out stacks of $100 bills. The reality is way more modern and digital and a lot more complex.
In the real world, when people talk about printing money, they're usually talking about something called quantitative easing, or just QE. So here's how it works in a nutshell. The central bank creates new money digitally. I mean, literally just by typing numbers onto a spreadsheet. Then they use that brand new digital cash to buy stuff like government bonds from the big commercial banks. This floods those banks with cash, which makes it easier and cheaper for them to lend that money out into the real economy. It's a powerful tool, but it's risky. It's like pumping rocket fuel into the engine. If you use too much, you can easily start a massive inflation fire. Now, because these tools are so incredibly powerful, central banks in most stable countries are designed to be independent from politicians. And the reason is actually pretty simple. Politicians are always thinking about the next election. They're tempted to hit the accelerator to create a short-term boom, even if it causes a long-term inflationary disaster. An independent central bank is designed to be the adult in the room, to take that long-term view and make the tough, sometimes unpopular decisions that politicians just won't.
But let's be crystal clear here. They are not perfect. Far from it. They're run by human beings who have to make gigantic decisions with incomplete, often confusing information. And when they get it wrong, and they do, like by waiting too long to fight inflation or by hitting the brakes too hard and causing a recession, everyone, and I mean everyone, feels the consequences. Which brings us right to the final and, frankly, the most important question of all. Why should any of this actually matter to you? The answer is simple. Because whether you pay attention to it or not, the decisions made in that economic control tower have a direct impact on your financial life.
The interest rate they set, that directly influences your mortgage payment. Their battle with inflation, that shows up in your grocery bill. That delicate balancing act they do with employment, that could determine your job security. From the interest you earn on your savings account to the debt you owe on your credit card, their decisions echo right into your wallet and shape your financial future.
So the next time you hear on the news that the central bank has moved interest rates, you'll know it's not just some abstract economic noise. It's the control tower adjusting the flight path for all of us. And you'll know that decision is going to ripple all the way down to you. The goal here is to make these big ideas clear. Because the truth is, the economy isn't really that complicated. Most of the time, it's just badly explained.